Lots to cover today. Happy Sat Stacking Saturday. Let's get it. In today's show, I'll be breaking down the latest Bitcoin, technical analysis, as well as trading guru John Bollinger forecasts a Bitcoin breakout with $50,000 per Bitcoin on the horizon. Also breaking news, Bitcoin's difficulty rises 1.65% in first 2024 retarget. We'll also be discussing Ethereum to Skyrocket by at least 340% in 2024. I'll be breaking down this crypto trader's outlook. We'll also be discussing the SEC moves closer to a spot Bitcoin ETF approval with 19B4 amendment filings, as well as VanEck pledges 5% of their spot Bitcoin ETF profits to core developers after the SEC approval. We'll also be discussing Bitcoin ETF approval would be a historic mistake, according to Better Market CEO. But Bloomberg ETF analyst James Seyfarth disagreed with the letter, arguing that denying the spot Bitcoin ETF would be a criminal move. Also in today's show, I'll be sharing a Bitcoin price forecast as analysts caution against missing out, as Bitcoin may surge to $500,000 per coin with the ETF launch. I'll also be sharing the latest from the high priest of Bitcoin, Max Keiser, as he exposes the truth about BlackRock and Bitcoin. Quoting him here, BlackRock is terrible. They're one of the worst players on Wall Street. They are completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs. Their ETFs own more stocks than their stocks, and they charge a fee for that and have incredible political influence they use to make it easier for them to game the system. They're really a plague on capitalism. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. But without further ado, if you're new to the channel, be sure to smash that subscribe button to receive daily premium crypto news alerts every single day, 7 days a week, just like this. Also, be sure to smash the like and hit the bell icon to turn on all notifications. It helps out tremendously with the YouTube algorithm. Our goal is to get to 100,000 subs alongside that six-figure sexy Bitcoin price action I have a feeling we're going to hit this year in 2024. Today is pod episode number 1514. I'm your host, JV, and today is January 6th, 2024. So welcome to another Sat Stacking Saturday. Let's get it. Let's kick it off with our market watch as we do each and every day. Bitcoin back in the green, baby. Trading at roughly 44,200. Love it. We got Ether also in the green, trading just under 2,300, along with XRP barely in the green, while BNB, Solana, Cardano, and AVAX are all pulling back and in the red. And they say, when in doubt, just zoom out. And zooming out on the monthly, we can see Bitcoin still in the green, but barely. We got BNB up 34%, Solana up 54%, Cardano 19%, and AVAX leading the pack, along with BNB up roughly 33%. And checking out coinmarketcap.com. Let's get a refresh to see the latest data. The market cap is sitting at 1.65 trillion with just shy of 50 billion in volume for the past 24 hours. Bitcoin dominance back on the rise at 52.1%, with the Ether dominance pretty stagnant at 16.3%. And checking out the top 100 crypto gainers of the past 24 hours, we got Clayton leading the pack, up 21%, trading just shy of 24 cents, followed by Akash Network, up just shy of 5%, followed by Injective, just north of 4%. And below that, Conflux, Toncoin, Synthetics, Maker, and Axie Infinity. Now, which altcoins, if any, are you most bullish on for this bull run of 2024? Let me know in the comments. I greatly appreciate it. And checking out the crypto bubbles to get a visual perspective of the overall alt market. You can see many of the alts are pulling back in the blood red on the day, but we still got a handful in the green. And zooming out on the monthly, still overall massive gainers such as Sats up 222%, INJ 124%, ICP 149%, Solana 50%, Satoshi Vision 60%, OP 85%, Stacks 57%, Aster 102%, SEI 142%, and Osmo 139%. Can you say alt season? And checking out the Crypto Greed and Fear Index, we're currently rated as 70 in greed. We've been stuck in greed for quite some time. Yesterday a 72, but I'll take it, FYI. I don't mind it. Last week we were 68, and last month a 72 in greed. So there you have it. My crypto fam, let me know if you're pretty ecstatic for this week coming up. As you know, we didn't get the approval of the ETF yet, so all the experts are hinting 90 to 99% chance of approval this upcoming week, which would be Monday to Wednesday. Wednesday being the cutoff, which is the 10th, January 10th, the infamous date we have been waiting for quite some time. But anyways, fam, we still got a lot to cover. So let's kick down the door and share the latest Bitcoin technical analysis from John Bollinger, creator of the Bollinger Bands, which is a indicator we use commonly here in with TA. It says Bollinger forecasts a Bitcoin breakout with $50,000 on the horizon. So let's discuss it. John suggested the Bitcoin price is likely to break higher from the current level. This prediction is based on his analysis using the Bollinger Bands chart. Let me know if you use the Bollinger Bands, a popular TA tool he developed. And for context, Bollinger Bands are a type of statistical chart characterizing the prices and volatility of an asset over time. They consist of a set of 3 lines, which is the middle line, typically representing the simple moving average of the asset's price, and the other 2 lines are plotted as a standard deviation above and below the average. This tool helps traders to assess market conditions and potential price movements. Quoting him here from X, I think it breaks higher. Now, Bollinger's prediction using this methodology indicates a positive outlook on the king crypto, especially significant in light of the recent market turbulence. And here you're looking at the Bitcoin 4-hour candle chart. Now, so far, Bitcoin's journey in the crypto market has been marked by resilience, as evidenced by its recovery from a notably downturn in the market that resulted in the asset to trade in the $40,000 region. Currently trading at roughly the 44,000 mark, Bitcoin has shown a 3% growth for the past week. This rebound is particularly noteworthy following a bearish report from Matrixport concerning a rejection of the spot Bitcoin ETF by the US SEC, which tanked the market roughly $5,000 and liquidated like over $1 billion in longs, which was wild. That was last week. Joining Bollinger in bullish predictions is Dan Cambardello, another well-respected analyst of the crypto space. He has projected an upward breakout for Bitcoin, potentially leading Bitcoin to reach the 50,000 mark in the short term and 60,000 in the long term. Now, I've been calling for 50,000 here in January. Let me know if you agree or disagree with that. Also, keep in mind, we could see this ETF approval next week, with the 10th being the deadline. This projection is tied to the anticipation of the spot Bitcoin ETF approval, which can serve as a significant catalyst for the Bitcoin price movement. He explains that this upward trend would represent a historical breakthrough for BTC, especially in terms of breaking through the lower highs of the Fibonacci level. Quoting him here from X, Bitcoin ETF ticking time bomb. Approval can trigger historic crypto rally. Yeah, I agree with that. Notably, it's evident that the predictions from both Bollinger and Gambardello hinge significantly on the U.S. SEC's decision regarding the approval for the spot Bitcoin ETF. So the ball is in Gary Gensler's court. How do you think Gary is going to react? And while optimism prevails, he also cautioned that a rejection can lead to a deadline in Bitcoin's price, or a decline, potentially dropping below 40,000 to find support around $37,000. So let me know your thoughts on that. And as a bonus, I want to discuss the difficulty, which just rose again 1.65% for the first time in 2024. That's right, January 5th, Bitcoin once again broke another record in terms of how difficult it is to discover a Bitcoin block reward. The network's difficulty rose to 73.2 trillion after a 1.65 uptick on Friday Eastern Time. The change occurred at precisely 7:41 p.m. Eastern at block height 824,544, and it followed the 6.98% increase that took place nearly 2 weeks ago at block height 822,528. So every 2 weeks, we typically get a new difficulty adjustment. Fundamentally, Bitcoin's difficulty represents a metric reflecting the challenge involved in identifying a block subsidy to append a fresh block to the blockchain. The difficulty level changes every 2 weeks, give or take, to maintain a consistent block time, which for Bitcoin is about 10 minutes per block. The latest figure, 73.2 trillion, is a reflection of the current difficulty target. This number signifies the upper limit of what the hash of a block must be for it to be considered valid. When the difficulty is 73.2 trillion, it means the hash of a valid block must be less than or equal to the target number that is very low relative to the possible range of hash values. The lower this target is, the less likely a random guess of the hash will be below it, which effectively means it's harder to find a valid block. Now, over the past year, the difficulty target has soared to new records, breaking previous heights consistently. And I don't think it's going to slow down in 2024. What do you think, fam? The surge is attributed to the substantial increase in hash rate, now cruising at 545 exahashes per second, as per the Luxor's hash rate index statistics. Despite the last 20 rises in 2023 and the initial hike in 2024, the Bitcoin miners and the escalating hash rate remain undeterred. Block times have quickened beyond the usual 10-minute average, leading to a hike after 2016 blocks are mined. Now, according to Max Keiser, with this hash rate of 545 quintillion exahashes per second, that indicates that the Bitcoin price right now should be around the $400,000 mark per coin. So let that sink in. And throughout 2023, the network added more than 300 exahashes per second, maintaining a steadfast pace that significantly accelerated as the year concluded. Now, application-specific integrated circuit producers, better known as ASICs, have launched their next-generation devices, boasting elevated terahash capacities and enhanced efficiency, measured in joules per terahash. Since the close of the previous year, mining enterprises have produced tens of thousands of these advanced units, with a majority slated for 2024 delivery. So there you have it, family. There's the latest as far as the hash rate and difficulty is concerned, and the $50,000 prediction from John Bollinger and the other analysts. Let me know if you agree or disagree. First and foremost, that we'll likely see 50 G's incoming here in January. Holla at your boy. But without further ado, still got a lot of news to cover, so let's dive into our next story of the day and discuss a very bullish ETH prediction. One analyst calling for 10,000 ETH this cycle, another calling for 20,000 ETH. I want to know your thoughts on these predictions, so let's break this baby down. A widely followed analyst and trader believes Ethereum could hit the 5-figure price this year. The analyst, synonymously known as Credible Crypto, shares on X that his minimum price target for Ethereum in 2024 is 10,000. I second that. I think 10,000 is a very realistic, simple target to attain. What are your thoughts? A gain of over 343% from the current level. Credible goes on to say that his maximum price target for Ether in 2024 is 20,000 per coin. Holy moly. That gives me deja vu vibes of when I got into Bitcoin in 2017 and we ran up to 20,000 per coin like 6 years ago, but only this time, imagine Ethereum hitting 20 G's. What are your thoughts? That's an upside of around 786% from the current price action. And looking at the price of Ethereum in the low time frame, Credible says that while Ethereum has printed a local bottom earlier this week at around 2,100, the leading altcoin would still witness one more corrective move towards 2,160 bucks before challenging its resistance at 2,400. Quoting the analyst here, think that last liquidation wick marked our bottom, but at least in the short term, I think we may see a small move down and a bit more ranging before we're ready for the next leg up. Let me know if you agree or disagree with that sentiment. Now, Credible's bullish take on Ether comes as the blockchain analytics platform Sentiment says Ethereum whales are rapidly accumulating the second largest digital asset by market cap. According to Sentiment, the top 150 self-custody wallets now hold 56.25 million Ethereum, the highest level ever recorded. Meanwhile, exchange wallets hold 9.46 million ETH, the lowest level since June of 2018. Interesting. And in the case of both exchange and non-exchange wallets, Sentiment says that the top 150 whales now own 65.71 million Ethereum, which is a new all-time high. Now, clearly, the whales are the smart money, and the smart money right now is accumulating ETH. As you can see here, look at those charts. Wow. Top 150 self-custody wallets, which is 56.25 million ETH, most held all-time high. Top 150 overall wallet, 65.71 million ETH is the most held of all time. And you got in the blue, the top 150 exchange wallets, 9.46 million ETH is nearing its lowest level since June of 2018. So it's fastly coming off the exchanges. So let me know your thoughts on that particular prediction. Do you think we'll likely see a $10,000 or potentially $20,000 ETH in 2024? Let me know. But anyways, fam, we're going to get on with our next story of the day. We just finished the Ethereum prediction. So now let's discuss Bitcoin ETFs, which are on everyone's mind right now, right? That's going to be the focus of the rest of the show, Bitcoin ETFs. So here's the headline. SEC moves closer to spot Bitcoin ETF approval with 19B4 amendment filings. That's right, the US SEC has begun accepting filings by exchanges in a sign towards approval of a listing of a spot Bitcoin ETF. On January 5th, yesterday, which was Friday, 19B4 amendments were filed for spot Bitcoin ETF apps from asset managers BlackRock, Valkyrie, Grayscale, Bitwise, Hashdex, ARC21 Shares, Invesco Galaxy, Fidelity, Franklin Templeton, VanEck, and Wisdom Tree. Now, the filings are one of the last stages in the SEC approval process, but S1 documents must be completed in order for U.S. exchanges to begin listing shares of investment securities with direct exposure to crypto. Some experts have speculated that final approval for the spot Bitcoin ETF will be before January 10th, the deadline for the offering from ARK Invest and 21 shares. A potential approval could mean greater adoption of crypto in the U.S. and worldwide. As James Safart shares here, there's the first 19B4 amendment filing. Here we go. Let's go. Now, meanwhile, in a post, Bloomberg ETF analyst Balchunas showed optimism that the SEC would approve a Bitcoin ETF by the start of the week, which could potentially be in 2 days, family. Yeah, 48 hours from now. It is basically done. Latest, I am hearing from multiple sources that final S1s are due at 8 a.m. on Monday, as the SEC is trying to line everyone up for the January 11th launch. Wow, could you imagine approval and then launch the following day? Send it. However, U.S. financial advisors as a whole are not as confident that the SEC will approve the offering. In fact, on January 4th, it was reported that only 39% of US-based financial advisors even believe a Bitcoin ETF will be approved this year. I covered that story actually in yesterday's podcast, and I don't know what world they're living in. But anyways, in a survey from ETF issuer Bitwise, financial advisors across the country were asked several questions, with participants ranging from registered investment advisors, financial planners, institutional investors, and wirehouse representatives. And when participants were asked to select a time period for when they expect the spot Bitcoin ETF to be approved, only 39% of them answered 2024. So it just goes to show you how clueless the typical financial advisor truly is. What's your thoughts? How can you explain that? Why do the majority of them not even believe it's going to happen this entire year, let alone this week? Shout out Diego Rodriguez. Thanks for the sub, family. But anyways, let's dive into our next story of the day and discuss the latest with VanEck. I think this is pretty fantastic, and I have a lot of respect for them for doing this. Here's the headline. VanEck pledges 5% of their spot Bitcoin ETF profits to core developers after the SEC approval. That's what's up. Asset manager VanEck, which has a pending app for the spot ETF with the US SEC, said it planned to donate some of the profits from the investment vehicle to Bitcoin core developers following their approval. Now, what if all the rest of them did the same? That'd be pretty lit. In a January 5th post on X, VanEck announced it, sharing a 5% pledge to the Bitcoin core developers through nonprofit organization Brink ahead of the potential approval of the spot Bitcoin ETF app. This asset management said it had already made a $10,000 donation to the developers, regardless of whether the SEC gives the green light to the investment vehicle. As they shared here, we're not Bitcoin tourists at VanEck. We're in it for the long haul. That's why we made an initial $10,000 donation and signed a pledge to donate 5% of our Bitcoin ETF profits, if approved, to support Bitcoin core developers for at least 10 years. So kudos to them. The SEC has not approved the spot Bitcoin ETF fund for listing on any of the US exchanges at this time, but many expect the commission to decide ahead of the January 10th deadline, which is coming up in a few days. Let me know if you feel we're going to get the approval. And on January 4th, VanEck filed a notice with the SEC to register its Bitcoin ETF shares as securities on the CBOE BZX exchange. Now, the asset manager is one of the many awaiting on the SEC decision, including BlackRock, Bitwise, Fidelity, Grayscale, Valkyrie, Invesco Galaxy, and Wisdom Tree. The firm launched a media campaign in December following similar ad spots from Bitwise and Hashdex as Bitcoin game theory continues in full effect. Let me know if you saw their ads. And in September, VanEck made a similar pledge to donate 10% of all profits from its Ether futures ETF to Ethereum core developers for 10 years. The SEC previously approved crypto investment vehicles tied to Bitcoin and ETH futures, but any approval of a spot Bitcoin ETF could have far-reaching implications for adoption is precisely what the investors want and need. So we're sick of futures. We don't need any more futures. We need the spot. We need the real deal. So Mr. Gary Gensler, please stand up Please stand up. And shout out to Nipsey getting comfortable in the background there. But anyways, let's dive into the next story, discuss ETF approval, and then the latest BlackRock alert with Max Keiser blowing the whistle, as well as Alex Jones on BlackRock and their true intentions behind all of this. But first, we got to discuss this ETF approval. Bitcoin ETF approval would be a historic mistake, says Better Market CEO, but Safeart disagreed with the letter, arguing that denying the spot ETF would be criminal. Now, Dennis Keller, a CEO of nonprofit organization Better Markets, has urged the US SEC to not approve the spot Bitcoin ETF. Wah, wah, arguing that it goes against the core principles of the regulatory body. In a letter addressed to the SEC Secretary Vanessa Countryman on January 5th, Keller emphasized that if the SEC were to approve the spot Bitcoin ETF, it'd lead to investors facing significant risk. Quoting him here, "We submit this supplemental comment letter, which Better Markets very rarely does, because it would be a grave, if not historic, mistake, almost certainly leading to a massive investor harm if the SEC approves the pending rule change." And here's the actual letter. Let me know if you guys had a chance to read that. Now, Keller argued that the proposed product would expose investors to a risk of potential fraud, a concern he claims is commonly associated with the crypto industry. Quoting him here, "The approval of these spot Bitcoin ETPs, which are exchange-traded products, would not only expose investors to a market thoroughly contaminated with fraud and manipulation, and recently reported that over 324,000 crypto users fell victim to phishing scams in 2023, with around 300 million in digital assets lost to wallet drainers." Meanwhile, he further explained that would also enable the crypto industry to claim that its products are now approved by the U.S. government. However, prominent crypto commentators dismissed the letter, with Bloomberg ETF analyst James Safeart criticizing it on X. Here's what he actually tweeted. "Would be an absolutely criminal move for this to happen, considering the time and effort and energy from all these issuers and from the SEC staff over the last few months." Meanwhile, in another post, Fox Business journalist Eleanor Terrett reiterated negative remarks that Keller has made about crypto in recent times. "It is worse than a fantasy. It's a fraud on the public." So I'm curious how much money he is paid to speak this nonsense. What do you guys think? Keller made the comment during an interview with the Institute of the New Economic Thinking in May 2023. Good Lord. And in more recent news, 11 spot Bitcoin ETF apps were submitted for their 19B4 amendment forms before the close of the business day yesterday, January 5th. These forms are one of the last stages, as we discussed, in the SEC approval process, but S1 docs must be completed in order for the U.S. exchange to begin listing shares of investment securities with direct exposure to crypto. Some experts have speculated that final approval for the spot Bitcoin ETFs will drop before January 10th. And again, let me know your thoughts on that. Are we going to see the approval finally this week? When 50 G's? No more Mickey D's. Welcome everyone just joining the pod. Make sure to pump the likes and subscribe to the channel. We greatly appreciate that. But without further ado, now let's dive into our featured story of the day and discuss the latest with Max Keiser exposing the truth about BlackRock and Bitcoin. Here we go. Shout out to the high priest. He recently was doing an interview. This is like a glimpse of it. And I transcribed it for you guys word for word, and I shared it on X. It's already getting a lot of retweets and such. You can check it out later, but here's what he said. "BlackRock is terrible. They're one of the worst players on Wall Street." So someone just nonchalantly asked him, "What are your thoughts on BlackRock?" And this is what he said. "They're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs. Their ETFs own more stocks than there are stocks, and they charge a fee for that and have incredible political influence they use to make it easier for them to game the system. They are really a plague on capitalism." Now, Max is speaking facts right here. He also been tweeting all day regarding these ETFs. So here's what he wrote. "Quick reminder, when you buy any of the Bitcoin ETFs, you're buying into an index product that tracks the price. You don't actually own any BTC. That's right, you get the IOU version of it while they keep in custody the real deal. Now, he also wrote, when you buy any of the Bitcoin ETFs, you're buying into an index product. Yes, so we just covered that one. He also wrote, I predict these ETFs will be seized by the federal government in the interest of national security, and ETF holders will be made whole with either USD or CBDC, which we all know is central bank digital currency. So he also says, once Coinbase has custody of all the ETF BTC, they will close their on-ramp for users to buy and take custody of Bitcoin on their exchange, asking the question. We got about 3,000 votes in which 56% of the people said no, and about 44% of the people said yes. What are your thoughts? Let me know in the chat. He also tweeted, someone wrote, Max, do we know what percentage of actual Bitcoin these funds will be required to hold? Max responding, it doesn't matter. Once they get seized, the feds will own the BTC. So he is pretty confident that all of that Bitcoin is going to be seized by the feds. Now, where were you at the launch of the Bitcoin Futures ETF? And this is in response to the SEC's tweet, which is alarming. 7 hours ago, the SEC tweeted, say no go to FOMO. Just because others might buy a particular investment doesn't mean it's the right opportunity for you. Learn more about finding out what's right for you and your investing goals. Max responded, where were you at the launch of the Bitcoin Futures ETF? A known extremely high-risk garbage product not suitable for any retail investor. Pathetic you are. I mean, Jedi Master Yoda couldn't have said it better himself. He also wrote the two most common traits of Bitcoin ETF buyers. Number one, they don't understand Bitcoin. And number two, they don't understand ETFs. Preach. He also wrote, President Bukele figured out long ago that Bitcoin is a central bank and a fiat money killer. He made Bitcoin legal tender, and El Salvador is thriving. We say goodbye, IMF. The next big thing coming next week. Now, what do you think the next big thing is going to be? I think with all the hints he's been sharing is going to be a spot Bitcoin ETF with Bitcoin in and Bitcoin out. That puts to shame all the garbage ETFs awaiting approval in the United States. But let me know your thoughts, fam. Now, VJ wrote, ETF Pro, massive influx of capital drawing global savings into an inflation-resistant store value. Everything has pros and cons, right? Advantages and disadvantages, but here's the con. Increase the custodial concentration risk, the main reason why gold became vulnerable to state attack. We must work to mitigate the latter risk as much as possible, because look at this. You have all the applicants listed here. And look, Coinbase is virtually going to be the custodian for the majority of them. 1, 2, 3, 4. Gemini is 1 for VanEck. 5, 6, 7, 8, 9. So 9 of the top ones, it's all Coinbase. Very sus. Now, Fidelity is self-custody, which is interesting. Now, other tweets. Alex Jones has been blowing the whistle on BlackRock for a very long time, and now he's back reinstated on X. Shout out to the real Alex Jones. The UN has officially adopted the BlackRock plan to forcefully establish a corporate governance system called ESG. It does not matter what country you're in, it's all the same. Every evil agenda is coming directly from this group. That's why you see the open insanity of men competing against women in boxing across the world. And yeah, if you didn't know, USA Boxing is now allowing biological men to fight women. You can't make this ish up. United States, what's going on? BlackRock will pull funding if the organizations do not follow the ESG directive. Destabilizing the male-female ecosystem is key to their depopulation agenda. We're dealing with a death cult. That's quoting Jones. He also tweeted, this is extremely important information. Know your enemy. If people will just read what BlackRock and the World Economic Forum are saying and doing, will be game over for them. They are openly pushing a dystopian plan for the world. The communist Chinese-style COVID lockdowns were just a beta test. Read the globalist plan to use a novel virus as a pretext to launch a planetary police state controlled by the UN. We are here now. And he has another tweet I'm going to read. BlackRock is the conductor controlling over 85% of planetary wealth. 99% of the Fortune 500 take direct orders from BlackRock. Larry Fink openly brags about how he controls our behavior through the ESG regime. Their public goal is a 90% reduction in population. Men like Fink and Gates must be exposed. It's time to take our power back. The lockdowns, the poison shots, the open borders, the new wars, the tax on the family, it all comes from this death death cult. The parasite class has stolen the world and now want most of us dead. They are coming for all of us. This is total war. Let me know if you agree or disagree with the sentiment from Alex Jones and Max Keiser. And now I want to read you this bullish price target that the Bitcoin price can surge to $500,000 per coin with the launch of the ETF. This is important because we may get the ETF approval as soon as a few days from now, potentially within the next 48 hours. So here we go. Fox journalist Eleanor Terrett reports that the amended 19B4 filings and last-minute phone calls regarding the comments on the S1s and possible launch dates are expected in the coming days. And while the approvals seem likely in the next week, according to Terrett, the timeline ultimately depends on the SEC's ability to review the comments and amendments submitted efficiently. She described the current situation as a meticulous process of dotting the I's and crossing the T's, emphasizing the attention to the detail required by regulatory clearance. Now, on the other hand, we have crypto analyst Adam Cochran offering valuable insights into the potential impact of the Bitcoin ETFs, as all signs point to the imminent approval of these investment products. Cochran suggests that many may overestimate the short-term effects of ETF approval while underestimating its long-term implications. In the immediate aftermath, market flows may not witness a significant surge. However, Cochran believes that investment advisors will review their clients' portfolios over the next year and recommend diversifying even a small percentage, such as 1%, into the ETF. Cochran emphasized that the Bitcoin price performance with a remarkable 157% return in the latter half of 2023 will be a key factor driving investor interest. He envisions a gradual upward trajectory for the Bitcoin price, characterized by persistent growth and occasional market volatility. Now, ultimately, Cochran's long-term forecast indicates a potential Bitcoin price surge to $500,000 per coin. Send it, leaving the sideline investors regretfully waiting for a substantial market correction, quoting him here. Also, ETFs result in spot buys, not leverage, which improves the system health and are long-term hodlers less likely to sell volatility. So it creates a slow grind up for the underlying market health, like the best DCA you can ask for, talking about dollar cost averaging. Now, crypto analyst Ali Martinez suggests that the pricing of potential Bitcoin ETF may not have been fully realized, providing insight into the current state of the Bitcoin market. Mr. Martinez points to a deadline in the estimated leverage ratio across all the exchanges reaching a 2-year low. Can we have a supply shock? I think so. This indicates the Bitcoin traders are adopting a more cautious approach, reducing their use of borrowed funds as they await regulatory clarity on the ETF. So right now we have all eyes on this ETF approval. The level is reinforced by approximately 2.41 million addresses holding over 1 million BTC, creating a substantial support zone right now. The significant number of addresses with substantial Bitcoin holdings suggests a strong interest in maintaining the crypto's value, providing a foundation for market stability. That's right. And right now, the majority of the Bitcoin is in the hands of the long-term hodlers. So where my diamond hands at? With the laser eyes, make some noise. Martinez notes that the resistance levels ahead for Bitcoin appear relatively minor. This implies that fewer significant barriers are impeding the potential price increases, and with reduced resistance, the market conditions become more and more favorable for stable or rising prices, further supporting the bullish sentiment. So there you have it. What are your thoughts surrounding on Max Keiser blowing the whistle, telling us the truth about BlackRock and behind their evil agenda with these Bitcoin ETFs? And ultimately, no one of you guys are going to have access to the actual real underlying assets. It's going to be custodianed by Coinbase, as they're going to be the largest holder. And then do you think the government will just confiscate them all and then ban self-custody, which is clearly the agenda? Not saying that's going to happen, but it's clear if you can read between the lines. And let me know your thoughts with what Alex Jones has to share with blowing the whistle against BlackRock as well, and also surrounding this $500,000 price prediction off the back of the ETF approval. We also have Samson Mao, founder of Jan3, predicting we can hit as high as $1 million per coin within days or weeks after the approval of the ETF, which can potentially be within the next 48 hours. Let me know your thoughts, fam.